Ever hear traders mention things like NFP
Hmm.
and just feel completely lost?
Oh, definitely. It can sound like a whole different language sometimes.
Yeah. So today on the deep dive, we're going to try and demystify some of that. We're looking at the basic tools traders use, specifically economic calendars and financial news.
Exactly. And the big thing to get straight away is that these tools, they're not for predicting what the market will do.
Right.
It's really about being aware of what could influence it. Staying informed, not, telling fortunes.
Okay, got it. Awareness, not prediction. And we're looking at insights from the Trader's Toolbox, what to know about economic calendars, news, and more with M4 markets today.
That's right. They lay it out pretty clearly.
It reminds me of like a pilot checking the weather forecast before taking off.
That's a perfect analogy.
They don't know exactly how every bit of turbulence will feel, but they know what conditions to expect. They're prepared.
Precisely. Preparedness. So let's start with those economic calendars. What are they, fundamentally?
Okay, yeah, calendars.
Well, simply put, they're just schedules. Schedules of significant global economic events.
Like interest rate decisions,
Oh,
things like that.
exactly. Interest rate announcements from central banks, key jobs reports like that NFP, the non-farm payroll you mentioned.
Oh, okay, NFP.
Yeah, and inflation data releases, GDP figures, stuff like that. Major economic indicators.
So it's basically a heads up for potentially market-moving announcements.
That's it. Traders watch these really closely because, well, these scheduled events can genuinely cause significant market swings.
A surprise in one of those numbers could really shake things up then.
Absolutely. A surprise rate hike or maybe much weaker job numbers than expected that can send ripples through currencies, stocks, you name it.
And the source material from M4 Markets, it mentions their calendar tool, emphasizes accessibility. Why is that easy access so important here?
Well, think about it. When this data drops, especially if it's unexpected, markets can react fast, really fast.
Right, instantaneously sometimes.
So having that calendar info right there, easy to see, it lets you connect the dots. You see a sudden market move, you glance at the calendar, the jobs report just came out worse than forecast. It provides that immediate context.
It explains the why behind the volatility.
Yes,
That's it.
exactly. Context is crucial.
Okay, so that covers calendars. What about financial news? We're just bombarded with headlines all day.
Yeah, news is the other big one. Headlines definitely play a role, especially in short-term market sentiment. A big breaking story can trigger immediate buying or selling.
But how do you filter? There's so much noise.
That's the challenge. First, you stick to trusted, reputable sources. Second, you need context. One headline rarely tells the whole story.
Right, and the source material points this out too. Not every single headline is going to rock the markets.
Absolutely not. It's easy to get caught up in the hype cycle, but experienced traders learn to sift through it. They develop a feel for what's genuinely significant versus what's just, well, noise.
So it's about critical consumption of news.
Definitely. Being discerning, you can't react to everything.
Okay. So besides calendars and news, are there other tools traders commonly use to stay informed?
Oh yeah, there are others. Many trading platforms these days have built-in news feeds right there on the screen.
Graded, yeah.
And you've got analytics dashboards that can visualize economic data trends, make it easier to digest, plus simple things like mobile alerts for key events or breaking news.
So more ways to get information quickly.
Exactly. It's all geared towards making it easier to stay plugged in.
But, and this seems like the core message we keep coming back to, staying informed isn't the same as getting trading signals or advice.
Precisely. That's a critical distinction. These tools help you understand the potential drivers, the underlying factors. They don't tell you buy now or sell now.
It's about building your own understanding of the market environment.
Exactly right. Empowering yourself with knowledge.
Okay, so let's wrap this up. Key takeaways seem to be: economic calendars track the big scheduled events that might cause waves.
The known potential impact points.
And financial news gives you a sense of the current mood, the sentiment, but needs careful filtering.
Right. And critically, neither one is a crystal ball. They don't predict the future.
They're tools for understanding the now, the landscape you're operating in.
And hopefully that understanding helps you, our listener, make more sense of market discussions without feeling overwhelmed by jargon.
Absolutely. And maybe a final thought to leave people with. Think about how much more accessible all this economic data is now compared to, say, 20 or 30 years ago.
Yeah, it's a huge difference.
What does that instant access do? Does it truly make us more informed citizens or traders, or does it just lead to more information overload and noise? Something to chew on.
Definitely something to think about.
Thanks for taking this deep dive with us today.